Can you hear me? All right, thank you. Oh, I gotta check that out. DM me that. Rufus the Soul. Let me give me a sec. I'll be right back. It's cold. Rufus the Soul. I'm not gonna lie, house music in the morning is peak. All right, we'll wait a little bit for people to join. I just started at 9:41, so I might as well just kick it off. Morning. Hope you guys are doing well. Today obviously we're looking at the NASDAQ per usual. Monday morning, so I wasn't planning on streaming, but to be honest, we've got Tuesday, Wednesday where it's gonna be a little whack this week. So we're gonna boot up the stream for just some tape reading today. Maybe some demo trading if it allows us to. My focus for this week relies on Thursday and Friday, just based on the economic counter. If you've not seen it already, Tuesday and Wednesday, Powell will be speaking at 10 a.m. So the protocol there, actually, I'll answer that question later, but that's why a majority of my focus is on Thursday, Friday. So for buys for right now, I was bullish coming up to these highs. For now, this is actually one of those times where I actually was in a not on demo but on my other account in here, moving back up into the new week opening gap. And I'll explain that later if you want the explanation. But as of right now, we got SMT at the lows, boom, displacing past the opening high. So my target right now is just London high for the short-term target, and then can be done. Obviously, if it starts expanding past that, then we'll look for other targets. But I'm gonna screenshot this, put in predictions. And it gives me a setup, then I'll take it. But otherwise, I've got no rush today. But right now we get more people. Tomorrow and on Wednesday, we have Powell speaking, if I'm not mistaken. The protocol for that is it's going to be really weird. So you don't trade before normally, you don't trade during. Instead, you wait until after he's finished, which that represents either the question portion of the interview, or it's completely after the thing finishes will the real move happen. So if you want to sleep in Tuesday, Wednesday, you can. If you want to just show up later, you can. If you want to skip it completely, I totally understand for that as well. But majority of my focus relies on Thursday and Friday, since we have 8:30 news days on both of those, and they're not crazy high impact, just regular high impact, not tier 1 or anything. So that's what I'm looking for the week. As of right now, looking for this high to go. And we're going to dig back further into this inefficiency. So, but we got stacked relative equal highs from both time-based previous week high over here and over here. You can see all of this low resistance buy side still printing. So to me, it's probing that all for a late summer run. But we just got to see how it wants to react. Obviously 9:45 coming back down, touching the consequent crusher on the new week opening gap, taking the stops, trading to the gap, and now moving up. So to me, that looks like this would be the short-term draw, and we're still stuck in the consolidation. Last week I said I'd favor if this was going to be the seasonal low, and then Trump bombed Iran. Can't do anything really about that. Here we are down here. So that's why I was actually looking for longs inside an Asian range. But obviously there's going to be a heightened volatility this morning. You can see we're down 100 points, up 100 points already, which I guess isn't crazy high, but it's going to be a volatile week. A lot of movement this week with everything that's going on. I'm saying like that's going to matter, but it's just end of the day, it's all smoke and mirrors. But I'm expecting Powell's speeches tomorrow are going to have some crazy impact after the war news just came out. So we'll keep that in mind for now. 5-minute chart, you'll have a SISD if you can displace through here. This is one of those ones where really I would just need to see a closure, but I want to see at least one inefficiency print on the way up. This is 9:30, so this would be your first presentation gap. First presentation. But yeah, I'll cover that later. I think I'll maybe do a market review later today, and we'll cover that. We can see the probed highs are here, low resistance, boom, 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 right below the higher time frame gap, right in here. All right, and you can look for premium of that range, obviously, which we're digging into right now. But relative equal highs, and then you got this. And then if you want to, last manipulation leg of the dealing range would be technically here, this entire thing. That puts you up pretty far past the previous daily high. There you go. There's one inefficiency printing. That's what you want to see. So wait for this candle to close. Probably it's going to close slightly higher. Fill halfway. Actually, we can come all the way down into the gap. 9:45 news. So for 9:45 news, that's it even came out. I didn't even realize. Yeah, it's just one of those ones where it normally has almost zero impact, nor is it really going to affect anything in terms of a trading model. So it's not. I don't even consider it a news driver, whether it's red or anything. So we'll definitely get this inefficiency to form. I'm also slightly tired from the weekend. My sister just graduated, so we have a bunch of people, or we had a bunch of people over at our house. So I was busy this weekend with all that. I was not able to do the Q&A and backtesting video today. So that'll be, or this weekend rather. So that'll be today, as long as I've got time. This morning I woke up, I was just pretty exhausted, so I don't really think I was in the right mind to trade. So, and yesterday, like I said in the Asian session, I took some small stuff. So this morning I'm just tape reading it, and then I think by the market review, I'll be fully back in there. But I got out of my groove since Friday, so I need to try and get back into the flow of things. So there's your inefficiency forming on top of the 5-minute SISD. We're approaching macro time as well, and you have a short-term dealing range between here and wherever that swing high is. So you got the order block. This is where you got the order block here. Obviously, the candle body is going to be more. This entire range is going to be the sensitive portion of the bullish order block. So 1050 right here, dropping into it. If we have a reaction off of that, that's perfect. Comes down, touches that, that's normal. If we're to take out that swing low, I don't really like it anymore. So since we have the 5-minute SISD over here, or a breaker, whatever you want to call it, you extend that out. Maybe the highest up closing candle, where you could say it's this range here if you wanted to. You could say on a 1-minute chart if you wanted to, it'd be like this here. Either way, bullish order block with the inefficiency, pair with a 5-minute SISD. I want to see, obviously, how far it wants to dig into here. So a lot of people, you can either limit order on a demo, of course. You could put I would put on the limit order here, or you could wait to see how it wants to react to the gap. But then you obviously you're going to miss some of the movement from here to the buy side. That's your short-term target. But like I said, if the wick is holding, it's pretty good indication that order flow is going to be bullish. But as you see, that the PD areas right now are holding quite well, despite being maybe somewhat low probability. At least this order block is not the highest. This would, in that case, kind of become a propulsion block. So you see the candle bodies there closing pretty healthily. You can see a 15-second SISD if you get one. Wick is inefficient, right? So you want price action to stay within this wick if this is in fact the low. See it closing through. So now you can go back to the 1. Yeah, it is great, right? It's awesome. It's the last one, so I'll try and get them on trading, but that's definitely not going to happen. So this little wick here and immediate reclosure above the wick is one of the strongest algorithmic 2 candles signature you can get. There's a couple other ones that are pretty strong, but if you see this wick comes back down, the next candle immediately comes up and closes above that wick there. Obviously, with the context of things, quite strong. It's not going to do it here, so got pretty close to it. And now we can go back to 15-second chart to see if it wants to complete this MBM. But now you see it's staying within this order block here with volume imbalance. It should speed above this high. I don't think we have any. Do we have any gaps past that? No, we don't. So from here to London high, you've got 5 of these swing points. 1, 2, 3. This is the one that's going to be the most. It can cause a short-term retracement. So we'll be watching that. Like right in here. Boom. That could be a SISD long. Stop at the low. Targeting the high. That's someone's model. That could be your model. But now at this point, if you see displacement, obviously SMT or something during these lows, wait for it to target the but then by the way, obviously the reason I was saying okay, this is the swing high that may cause retracement is you have this the candle bodies up here are slightly higher. So this is inefficient, this wick. So liquidity resting there is going to be slightly lower than compared to this and this. This being the London high, this one having the most of the candle bodies. So when it takes out this high, I want it to really speed through and hit this one. If it rolls over a little bit, or even a black candle off that, that's fine. Really, you can get the same thing off of this too, a black candle coming down. But either way, London high becomes the draw on liquidity. Probably have a re-entry here on a 15-second gap. We got one right here. Boom. See if it wants to hold it there. And obviously London high is probably a short-term target. I would like for it to climb and close through here and really go for the previous weekly high. But let's see. Now I wished if there was a better dealing range we could have pulled. Right, like there might be one 15-second chart. There's one over here. I got this last manipulation like here. So there's really nothing it's like Monday's PA. 15-second chart. See if the candle buys want to stay in there. Failed to touch the order block here. And this right here would be someone else's entry. On TSX? Oh, Top Step X. It's not even there on TradingView? Nah, I'm curious. Can you see a screenshot? Let me see if I can pull their charts up. Oh, yeah. Oh, that is kind of weird. Yeah, sir. One setup. I love it. Minus, minus, plus. Back up to green. Beautiful risk management, my brother. So you can see the candle bodies all staying within that 15-second fair value gap. 15-second. Look how, this is what I was talking about earlier, right? This reaction off of the order block. You got this is the strongest portion here off the propulsion. This wick plus inefficiency, boom, tags that right at 950. So at this point now it's not holding this as much as you would like it to see. So you can draw also the 5-minute. Whoops. So all of these are premium arrays. They, in theory, should all create discount retracements. There's going to be ones that are stronger and are more likely to create discount retracements, but each of these are premium, 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 right? On a 5-minute chart, there's no 5-minute gaps above here. You look at the dealing range between this low and this implied high, there's no inefficiencies above this. So these are all the premium arrays that are likely low risk buy targets. Or sorry, low-hanging fruit objectives. So each of them should create now either a discount retracement into a short-term dealing range or a parent dealing range retracement, which is going to be much harder. Parent dealing range retracements is this low to like this high, and then we come all the way back into discount of this, and then come back up. That's where a lot of times you get stopped out on those kind of moves compared to something else where tags this high, it references the most recent dealing range, that low to this high, drops into discount. Then I'll come up, take this high, then you got dealing range here to dealing range here, or either it'll pop up, take London high, or it'll come back down to that short-term discount and then do the same exact move. And each of those can be entry models if you want them to be, or as you're tape reading the 1-minute chart or the 5-minute chart, that's what you look for. So little retracements, if you're in a log and you see a little retracement, go back to see why is it retracing right now. It's not going to be doing this randomly. It's not going to be, the selling pressure didn't kick in, right? There's going to be some sort of premium array or order lock or PD array that is trading into creating a discount retracement, and it's going to seek what between that dealing range low and that dealing range high. This is an intermediate term low, right? Gap being filled, short term low after it, that makes that an intermediate term low. Dealing range between there and there. You look within it. Are there any gaps? Nope. What's a discount PD array that it could be using? You got an order block right there. Boom. So between this low, this high, that's an order block. That's dealing range. That's also a discount PD array. It's going to use that. Now it's going to expand up. You go for the next one. You see how we react off of this one. Do we close through it or do we tag it and come back down? And like I said, that's going to be the one that I wanted to see how we react off of. And this is an example also of where you can be wrong and it still works out. I'm allowing myself to be wrong. If it goes, smashes right through, big deal. But this is kind of those things where if you're learning from it, see, comes right through. If you want to learn from it, you have to just say this stuff. Okay, so I want to say either out loud or in your head, I want to see what it does here. Or you're going to say, okay, I'm going to be annotating it here to see how it reacts. And eventually you do that over and over and over again, and then it should do something. So you hear me say, okay, it should do this, should do this. In this case, I was one swing high off. Okay, created the retracement off of this swing high. Boom, tags it, drops back into a dealing range discount, shoots up, takes that one, takes that one. Still the target, still what we expected to have some speed through, but now for the future, something I can learn from. But that right there would be enough of a model, right? Macro time entry within an order block and fair value gap, taking up to that swing high. I'll put that in prediction chart right there. And that would be it. That's all you need, right? For a Monday, boom, you could be done for the, realistically, you could be done for the week, but done for the day easily. And if you're looking at that little scalp there that I said, that could be someone's entry model. SysD up to here. That's a 2.43. Boom. Same thing on the 15-second chart. But like I said, London high is the short-term target for me. It's also 10 a.m. right on the dot. So you'd like to see it close pretty heavily through here. The next PD array on a 15-minute chart we have is this gap. Then we have this gap. This is more of a balanced price range. Then you have this swing high up here. So we'll be marking these PD arrays out if you want to. This one. This one. Then obviously the ERL up here. Boom. So now you got further targets. And also you can rely on what time of day. This lowest will form at what time? What time do you want to see the high format for this session? Friday also kind of consolidated after in the PM session. So another reason why Monday can move. But 10:30 to 11 o'clock right here. Let's put 9:30 and 10:30. So there you go. There's a nice wick up, comes back down into a dealing range discount of this here to here. And then it starts to climb and close now through. We'll see it close through this buy side. Got stopped in the 944 wick lower. Got back in though. It's so weird. Beautiful. Average RR today, 14. Craziness. Solid work, solid work. I wonder if you got in like negatively slipped. Like where it triggered your limit and then it came back up fast enough where as soon as the limit actually triggered, you was back up to a $92 loss. That's actually happened to me before on Top Step. It's like when you get slipped, right? But it actually works in your favor. Tags it, and then it comes back up fast enough where if it triggers on the system, now you're back in profit. Entered off the 1 minute SysD. Should have held longer, but took off a London highs. There you go. No, there's zero shoulda, coulda, woulda. Boom, that's the what is. Fantastic trade. Then with the future, all right, we know. And obviously there, just holding one contract, that's perfect. It's just lifting the weights, especially with a new concept like this, time-based entries and time-based targets, things like that. Just lift the weight slowly. All right. So take this as this is just a 5-pound weight. Right? Nice 2 to 1. 5-pound weight, 5-pound weight, 5-pound weight. They eventually go to 10 pound, then 15 pounds. So look at that as that's perfect. That's exactly what you want to do. If you have the right bias coming into that, take the trade. Like I said, I want to see how it reacts off the order block. Boom, right there. That's someone's entry model. And you can see how nicely it's playing out. So there's your first 15-minute PD area. Obviously, these are kind of, I look at these, both of these as speed bumps. Okay. So you don't really look at them as targets as much as this ERL is way juicier. This is the juicy target, right? This is what we want. a lot more liquidity resting there than there are on these tiny 15-minute inefficiencies. Okay, they're still going to be used as targets. I understand that. They're also moving from what? External range, boom, right there, back to internal. You could argue that. On a wire on a chart, you could say we're coming back into an IRL, but I think definitely ERL back to IRL premium. So I still want to have these IRLs marked out just to make sure we don't get anything but they're more speed bumps to me. So if we're closing through them, that's great. I don't really want them to slow down price and then it drops back into the pair and dealing range discount. That would woo me away. If they're just closed through and obviously this kind of slowdown here, that's what I kind of want in this one and this one. If it's just one or two black candles coming back down or even to drop into a short-term discount dealing range, that's fine too. But this target up here is overall what I'm looking for. Mm, 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 mm. $9.50. Inefficiency. Still within this 1 hour gap, so don't forget that. Like the 5-minute being such healthiness. Let me see if Slander took a trade. No, he didn't. It should have been his model. He's not in here yet. Bisi. I'd actually like it to come down into this IRL here. So these are both speed bumps. Speed bumps. Also past the -4 or the 15-second dealing range. This 1-minute dealing range is the last thing you also could be using when you don't have the last manipulation leg present on the 1 minute. There's two ways you can obviously standard deviation. You could use the 1 minute, the 5 minute, the 15-second. In terms of the session, that's normally what I use. You also can use the opening range standard deviation of -1. So between the lowest low and the highest high between 9 a.m. and 10 a.m., you get -1 right there. Opening range standard deviation -1. But in this case, it almost puts you exactly where a -2 would be anyways. So something to look for. Even if you don't use the exact Vantix model entry, the Vantix video is so good. I'm glad. I know someone probably took it. Right down here. I was looking to see if there's one in the macro time. I don't think there is one in the macro time. Not a clean one. There is one, but it's not clean. So normally, never mind. It's not that important. It's not I'm gatekeeping. It's just not important. So I'll come back down into the IRL here. If it overshoots it, if it stays within it, it really doesn't matter to me. It's a speed bump. It's a weak PD rate. So it's not the end of the world if it doesn't hold it. We also have supporting PD arrays all the way through here. Really, if it doesn't, it shouldn't come down and touch this order block at all. So I'd favor if this is left open as a breakaway gap. Really same thing with this gap here. So as long as it doesn't come back down into there, I'd still have no problem in seeing it being bullish. You can also see this entire range here is a 5-minute gap. So that 5-minute gap could be completely filled in. It would still be bullish. So these higher premium arrays these are premium arrays in terms of the current dealing range, premium arrays. So premium arrays are not going to be holding as well as discount arrays. We know that. We're going to leave this actually up here. But, at this point, this becomes a more interesting and important level this time of day. Okay, so now that we're kind of stalling out, obviously if you want to keep watching it, we can, but I'll cover that Asian explanation is what I was talking about. But obviously large new week opening gap. You cannot predict the new week opening gap. There's absolutely zero correlation to really anything that comes out. Obviously there's tendencies for it to do one thing over the other, but you cannot trade the new week opening gap, right? I'm not going to put a limit order or a stop order and try and trade it. So that out of the way. Obviously there's news over the weekend. Don't be worried about it. Don't dwell on it. Don't fear it. You get the same news every year. All right. I had a whole kind of thing in one of the chats, but tariffs happened how long ago? Everyone freaked out. And now no one remembers the tariffs. No one. Right? It still has its move. It's still obviously in the market in terms of things. It still does what it's supposed to be doing, but don't fear the news. That's exactly what it's programmed to do. Fear. Induce fear, induce prosperity, think everything's good and dandy. Don't worry about anything. All right. Until things actually change, then you can start to worry. But unless I'm getting drafted and unless my hometown's getting attacked, nothing that's really gonna worry about me. And I know where my piece is. So either way, large new week opening gap. On the 4-hour chart, obviously, as you approach the weekly perspective, that's going to be the main one. This entire thing here, obviously between these 2 points, that's almost a liquidity void. It's not really as much because you have this wick that comes down and fills the numbers there. But either way, this entire section here was inefficient. Okay. Also, when you see this new week opening gap like this, that's that high up. Sometimes what they want to do is they'll open that up and then fill in the numbers to almost stop the sentiment completely. And you can see it here, right? If that news was so big, it just had this huge impact on the market. How is it then on Monday when we open up, we're closing out? And I sent a text to either it was Slander or someone else, but at midnight this morning, I said, watch how this macro should take us into further to new week opening gap. I'm expecting a full closure by open tomorrow. So we completely closed it out. That was my bias coming into it. I did not think it was going to come this high up, but rather just right to here. That's all I need to do. So this is my target, just to come in and fill the numbers. And then on a lower time frame, 15-minute chart, we just had a nice shift above here and then a gap during the macro time. And then coming up to this high and obviously closing in the numbers, like I said. But very rare opportunity that, like I said, that I will never even consider that. But when it's there, I'm not opposed to taking it. Dropping back down into the 1-minute gap with a one minute order block. But news is news. Somehow, by the time we open up on Monday, it's completely closed in and we're back to rebalancing exactly what we should be doing. Right? Comes back down, touches the opening perfectly. Constant encroachment perfectly. Comes back up. Nothing's wrong. Nothing's changing. They're not going to do anything. It's all... At this point, I know we're entering a weird period of time, but at this point, you don't even know if the news is real or not. I'm not saying this is fake news, but I'm saying if you saw that AI video we put out and the stuff, soon enough, whether that's now when we're living in it or in 6 months, right? You're not going to be able to trust anything you see, anything. You're going to have to question everything. And when that happens, there's going to be a lot more fear going out. They're just up in the ante. It's always going to be the same thing, right? Control. People are, they already got you on your phone. They already got you on your phone 17 hours a day. What do they got to do? Boom. Let me just print the program. Watch the program until you're subconsciously convinced that's what the world is. Put the phone down. See what's actually going on around you. My life has not changed from when Obama was president to Biden being president to Trump being president. It doesn't really matter. Like, the way I've lived my life has been the absolute same. Nothing around me in my personal life. I've been blessed enough to really not really be affected, besides maybe taxes. But exactly, the world keeps going, and you should too. So don't worry about this stuff. Don't get hung up on it. If you see other people talking about it, it's already doing its job, right? You don't need a news source. You got other people to tell you what the news. And if it's already affecting them, the fear's already been placed in. So that's the way I look at it. This life is too short to be concerned, to worry. You don't got that. You don't got that time. You don't got that luxury to be worrying about useless stuff. When you get the letter in the mail, something happened. Obviously, you can worry about it then, but there's no point in worrying in something of reality that hasn't happened yet. And if you find yourself talking about what ifs, if you find other people talking about what ifs, shut it down. What if I went long here to here, and I start complaining about how much money I missed? What is it going to do? Nothing. Same thing with the real life. Don't talk about what ifs. There's nothing but induce more fear. So, 1 minute gap there, holding quite nicely. Normally you have this consolidation range right after the macro time, but at this point, I'm pretty convinced that 10:30 will be hit. I could turn the stream off now. Just be good, man. Doing good to the world, and the world will do good back to you. Exactly. And God tells you not to worry. There you go. Worrying cannot add a day to your life. The words of the man himself, which is true. It cannot add a single day to your life. You can also see the 1 minute if, for the most part, it's holding that IRL. Come back into it. All right, so you got that as a confluence compared with the gap. Pair with the gap, I mean. Nice shoot up into there. I'd like to see it close through if you can. All the charts right now are healthy. 4 hour, 1 hour, 15 minute, all healthy. 5 minute healthy, 1 minute healthy. I see no reason into it not taking out this ERL up here. So time of day is still first priority, then this is second priority. So I'd favor if price goes here in time and price, right? Not this level, not over here, but rather right there. And that's what it shoots for. Box to box. It shoots for below here after 9:30. And it shoots to above here after 10:30. Box to box. Time and price. Come up there, bangs the top, comes back down. You're also approaching the -1 to -1.5. Yeah, no, actually it goes from box to line, but it does go from box to box. It goes from box to line, back and forth. Right? Yep, that's all that trade. But this movement here makes up for anything that I may have missed on Friday. I know Friday I was actually wrong in my bias. Perfectly okay with that. Over the weekend, basically all I was doing was studying Friday's price action to see where I went wrong, exposing my weakness. This is a nice thing about the market, right? It perfectly exposes all of your weaknesses, whether that's mental, whether that's technical, whether that's in your bias, whether that's whatever it is. It's a perfect representation of whatever you are. And the strong man always focuses on, and the powerful person always focuses on what they're good at, what they're strong at, and they never outwork someone else who's always constantly working about their losses and their weakness. So obviously it's a very easy trap to fall in, especially as you become profitable and as you become better and better in trading, that we tend to focus mostly on our strengths and what we're good at because it's just a self-fulfilling thing. And a lot of times that's all that's needed to continue the streak of profitability and things like that. But you must always be willing to learn, number one, and number two, accepting that there's room to grow and room to learn. At that point, then it's much easier to live, I think, because you're always learning and you always know that there's something that's either going to humble you or bring you back up, right? If you lose, okay, well, there's more to learn. That brings you up. I'm going to build a stronger edge. You win, okay, there's always more to learn. That brings you back down to center. He's always got to stay within the two lines of greed at the top and fear at the bottom. You got to somehow operate within here. You win too many times, you start going too high up to the greed level. You lose too many times, maybe if it's one time, you go way down to the fear. What's the thing that keeps you at the center line? Learning. The addiction to learning. The willingness to learn. So no matter win, loss, no trade, there's something to look at. So Friday's price, or over the weekend, the time that I had to look at the charts, I was simply just looking back at Friday. I had my bias wrong. I didn't even take a trade on Friday because I didn't like it, but my bias was wrong, and I was somewhat married to that. And it came back down and offered a decent setup on the way down. I didn't really like any of the shorts on the 1 minute. To be completely honest, looking back at it, I still think that even if I was bearish, it would be very difficult to be entering in any of those shorts. So I acknowledge that. It's more of the perfect hindsight thing of, yeah, I can see it's going down, but could I have really entered? Perfect hindsight tells me not really. It would have been very difficult for me to get a good entry, or I may have only taken a 2 to 1 or something like that. But to me, the tape reading itself is after you figure out bias. So going back into it, the thing that I could say, okay, this is probably one of the stems for me of how my bias was wrong and how I was not so flexible when I should have been flexible, was the fact that it goes right to the beginning. If you go back to daily bias, the first sentence I said, my preference is that the bottom of the consolidation range is in. Boom, right there. That's the error. That's exactly where the error is. And this is why it's extremely important. If I've ever been on a one-on-one call with you, or even if I haven't, and I've told you before to go back in and in the beginning of the day, get your bias, write down what your bias is. Tape read for 60 to 90 minutes, whatever it is. Then after the day is finished, you go back in, you screenshot everything back and forth. This is what you need to be doing. Because to me, okay, my bias is wrong. I'm not going to have to guess what my bias was. I'm not going to have to guess what my reasoning was behind that bias, because it's going to be clouded by the thick clouds of emotion and the thick clouds of being right and wrong and the thick clouds of ego. It's not going to be, you're not going to think logically until it's two days later. And if we're on a Monday, 2 days later, Wednesday's already here, you're wanting to trade on Wednesdays. We're not even be thinking about so the fact that it happened on a Friday, I guess, is beneficial. But this is what you need to be doing. You need to go back in and see what the weakness is. So to me, okay, I can instantly go back. I have a log as to what I was thinking 10 to 20 minutes before the session of what my bias was and what my protocol was going into the session. Boom, first sentence. My preference is that the bottom of the consolidation range is in, right there. Do I think that's an unreasonable statement? I don't. I think the price action coming into it was pretty reasonable. So that being a correct statement, I validate that statement. I think with the data I've been seeing, that was a perfectly reasonable assumption to make. Given the expansion here, given the expansion coming into the session, okay. But was it right? No. So I can't base, I think, coming into the rest of building my bias, I base too much of the rest of my analysis off of that one data point. We always have a starting data point, always. So I'm never gonna have to say, oh, that was the reason right there. It's rather than the fact that I placed too much weight on that statement, and then the rest of my bias was almost a confirmation bias compared to actually looking at weighing the other side equally and being a fair judge, and actually accepting the data earlier into the session that it may have been bearish back into the range. So I can go back in and look at that and be like, okay, that's actually what I did. And it's not actually an error in the outcome, it's an error in the process. So I'm amending and adjusting my process. My process was the fact that I placed too much weight and I was almost an impartial judge finding my bias on Friday, unable to then identify new data that may suggest that I was bearish. And at the end of the day, it kept me safe. So there's no problem with it, right? There's no, in this case, there's no problem with losing. There's no problem in being wrong. It's rather the fact that the ego may say, oh, you should be perfect 24/7. I didn't get a trade. I was just looking for longs, and I think that it did keep me safe on Friday. So I'm happy about that. How can I fix it? By the things I just said here. So that's why keeping a log of everything that you do, in a sense, is very beneficial. You got 3 minutes till 10:30. So you know where the draw is. That's what you should be doing. If you're wrong in a day, if it doesn't work out in your favor, whatever, and you don't do anything about it, you're only making the problem worse. It's like if you've ever been depressed, or if you've ever been in a bad mood, or like had a bad day. It just seems like everything you're doing or everything that happens to you, in a sense, just keeps pushing you down to the hole. In a sense, we do that to ourselves. So step away from the chart. Give yourself time to mentally think. Give yourself actually be bored and let those thoughts filter and process. Then when you come back a couple hours later, you're already back at the chart. You already know, okay, I'm just here to learn. I'm here to school myself. And obviously ask questions. If you got a question about it, you ask me, you ask someone else in this Discord, you ask someone else on YouTube, whatever it is. You ask questions. And you figure out, what did I go wrong? Why didn't this entry model, if I had a 15-minute POI, a 5-minute SysD, and a 1-minute entry, how come then that this fair value gap didn't hold and I got stopped out? Right? That's a good question to ask. It's why? Why does it keep making a high here? Why does it make a low here? Why does it at this time do this? You constantly ask yourself questions of why. Then the how and the what figure themselves out. You come back in, you look at the PD rates, the signatures. That's the language of price is IPTA. Like, the language of IPTA is PD race. That's the only way we can really understand and decode what it's doing. And then you have all the data you need. You have the data right here. They can't hide it from you. You just go back and you learn from it. You look at the economic calendar. Maybe you missed something there. You look at the higher time frame, the lower time frame, cross-correlated indexes, see if there's anything over there. And now by the end of the day, you should have your answer. And a lot of times our answer then is not to refine our model or tweak our model or say, oh, I have to include the propulsion block after the 945 sweep on stops on the 1-minute chart. You don't have to include a bunch of stuff. It's rather, is this, number one, reasonable to include? If it's reasonable to include, you should have a sample size of 5 or more that suggests this is something you maybe should include into your model. Right? Say you keep taking losses, and the thing that would have helped you not take those losses is the fact that there's a 5-minute confirmation of order flow that would have saved you. Okay, well, the number one, that we can't just look at that the first time and say, okay, that's something that I can change, because otherwise then I have to include every single PD rate into my model. I can say that anything is going to be explanation for everything in any single given stance, right? That's why I don't like the 2025 mentorship that much personally. I think it's more subjective than it is objective. I can say that any new day opening gap or new week opening gap is bouncing price here, but the reasoning as to why this one is doing it, to me, is too subjective. Okay, so I can't include that into my model. But if I lose, and then I see, okay, Monday, Tuesday, Wednesday, Thursday, Friday, for example, all of those trades that I lost on, if I had only seen this 5-minute SysD or this 5-minute IFVG or whatever right before my setup, then I would have known to get in. Boom, then you have a filter. You got a filter now. Now you can start to implement that into your model. but you have a sample size. If you don't have a sample size, and especially if it's just a one-off, what you'll be able to do is when you're reading it and you're saying, okay, I know that this would have helped me, sure. But the likelihood, number one, of me seeing this live and the hindsight glasses that I have on right now too are impairing my vision to really use this properly. Right? So instead of looking at the fact that, oh, on Friday, yeah, we were in premium here in the consolidation range, flipped the buy side. Oh, I should have seen it was ERL back to IRL. You know, I could have seen all that, but it's more the process that would have given me this. And you can't say, you know, if I turn on a bunch of Newbeak opening gap indicators, you're going to see something up here that probably it tags into, right? Like you could do this, 8, boom. Oh, if only I had the Newbeak opening gap indicators, I would have seen it tagged 14 Newbeak opening gaps and then it dropped down. That's not a reasonable explanation for me because that's a one-off, right? It's not going to be something that we can use over and over and over again to refine our model. Why is the high? It's more of just it's the current session high. It's also the current daily high. So for the static range between 9:30 and 10 o'clock, sorry, 9:30 and 11 o'clock, you normally want to see the open and low high close on a bullish standard profile, 9:30 to 10, 10:30 to 11. So after 10:30, we now seek the current session high. So in here, that's when you want to see the new high of the session. Flux versus ICT, August 28th. What? No. Never outshine the master. Last Friday was more like a midweek reversal profile with reversal on Thursday, eyeing the highs rather than not. I agree. I'm with you on that. I think for it to be a bearish profile, it was a little bit too weak. I was with you, and that was my expectation on Friday as well. So yeah, there's going to be a bunch of different explanations for it, and always focus on your weaknesses more than your strengths. Right? Same thing in sports. If you've ever played a sport, our tendency is for us to learn a new skill or step into a new realm, and because we don't like it or because we suck at it, we don't approach it. We just let me go stick to what I'm good at, and you spam that. But someone who knows what they're good at and exploits that constantly only is successful for a certain amount of time. Eventually, the game changes, things adapt. Right? You ever played a video game before? You know exactly what I'm talking about. You use the same strat until it doesn't work, and then you got to adapt. It's a constantly evolving thing. Same thing, not in trading. Trading itself, you don't really need that, but rather in your mental aspect and in your model, up until the point where you find something that works. And normally, it's only until after you've tried a lot of things do you figure out this is the process I need to take. So this is what I was mentioning this earlier, but IRL being traded into, this is a speed bump, right? Trades into it, drops back into a short-term dealing range discount. What do you have here? Gap, traded into, short-term low. What does this make it? Intermediate term low. Right there, got a retracement into this dealing range. Right here, intermediate term low into that dealing range. So this intermediate term low is forming a short-term dealing range between here and here. That's a child dealing range. Instead of a run-on stops, right, your normal dealing range is like this. That's a dealing range, right? From here to here is your bullish dealing range. Or you can see this is also a dealing range, right? So this is a child dealing range inside of this parent dealing range here. So if this premium array was to cause a retracement, you want it to be this child one. So what do you look for? Between this high and this low, what's a discount PD array can tag? Well, obviously you have this higher time frame IRL. That's going to be used. In this case, you have this gap. Let me clean this up. You have this gap. Is that in premium? No. Could it use it? Yes, because you have a mitigation block over here. So, okay, could it use it? That's what's one PD array. Okay, drops into that. Then you have this gap with the bullish order block. That's going to be a lot stronger, and it should not close below that. It shouldn't. You can also look at mean threshold of this. Boom, it's closing above mean threshold. It's beautiful. Then obviously you have the IRL here, 15-minute chart. That also can work. Comes down, and then the way it's coming down, it should also be telling you something. Are there gaps forming? Is there speed? Is it high resistance? Is it low resistance? Right here, no gap, comes back up into it. Here you have a gap, right? But it's also layered on top of this, down, up. So if anything, this is more balanced than an actual inefficiency. If the inefficiency formed here, then it's a little bit more inefficient. That's still a gap, but it's not completely inefficient. So now it's trading back up, and you can see in here, low resistance, jumped onto a lower time frame. Does it look now like a market maker buy model? And you're fractally looking for the MBM to start. If you can find the starting point, then you can start to get in. All right, so this is our short-term draw. It's our current session high. It's 10:30. We're just looking for longs back up into that high if it gets us. It still see it's consolidating, so we don't wait. We don't try and trade the consolidation. We wait for it to leave. How do we know it's leaving? Displacement. Outside of the consolidation range, high and low. There's only two ways price can leave consolidation. Either like this, or like this. Right? Only two ways it can ever leave consolidation. So we don't wait for the consolidation to keep going, because the problem is within this consolidation range, it'll gap up, gap down, gap up, gap down, gap up, gap down. Wait for an internal range stop run within the consolidation or an external stop run. Wait for displacement outside of that range, and for one of the PD arrays to hold on the extremes, right? So if I'm bullish, I want to see it displace through this high, preferably form a gap on that high, tag into the gap, shoot off. Now, okay, now it's probably going to leave the consolidation. Or if it displaces through this high, and then through this high, energetically, I don't need to see the gap, retrace into the gap, leave it. Now I know, because at that point, it's not going to do that. It's most likely going to just send it for this high. So even if we have one little retracement back down into that tiny inefficiency, I would not need to see it drop into discount. So we're just waiting. We're waiting. You also could be looking for, okay, the reason we may be waiting is for SMT. So you come in here. Is there SMT that's going to start us off? YM, you can see, is dropping heavily. Boom. So you got ES sweeping this low. NASDAQ failing too. Does it want to have a strong reaction off of that? But even if you weren't watching it, it's not as important. I was just watching this chart. It's actually electrolyte water. So shout out up and up. Yeah, I got some more. I got up and up. They were always pretty good. And then I saw some podium electrolytes that didn't have B12 in it. So I was going to try that out. Because the problem is the up and up ones, you can't, with B12, you can't really take that anything past like 8 p.m. because otherwise it messes with your sleep. So if you find electrolytes that don't have B vitamins, you can also take them like post-workout later at night, and it doesn't mess with your sleep. So I'm going to use that. But otherwise, the B12 vitamins in the morning are like perfect because they help with ATP production in your cells. So you actually get more energy in the morning before you even drink your coffee. And then coffee, like 90 minutes in, boom, now you have no adenosine left in your blood, no crash. Drink as much caffeine as you want. That's the health algo. So you can see, right, we're just staying within this consolidation. There's no point in trying to trade between here and here. No point trying to predict it, right? Trying to get in, oh, this is the move, but my stop right here. We don't need to do that. We just wait. I'm on a 15-second chart looking for a scalp up to this high, right? Like we got to remember what we're doing here. And we can't let these energetic runs either sway our mindset. That's what it's going to do in a consolidation. It actually displaces back and forth. It doesn't just print slow, print back down, print slow, print back down. It'll do this, but the way it reacts off of it is more important. So, okay, gaps here. Let's see how it reacts. Volume bounce, order block, touches back into it, wicks. This one stays within this wick. Okay, so now it's starting to leave. Does it now want to displace through the high of the consolidation range? So that's some bullish price action. Does it want to displace through the high, form a gap, touch into the gap? Okay. Now we can start to leave. Let's see right here, there's a premium array we're trading into. This is the inefficient section right here. All right, staying within the wick. Boom, 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 boom. Comes up, takes out the high. And back into the consolidation. Healthy wick. At this point, you want to see if it can speed past this. If it can do that, you don't need to see it close through here. You don't need to see it go for there, go for there. Why? Because it just took out this high, dropped back down into the bullish roadblock there with the inefficiency, and now it's moving back up. So at this point, you should see it energetically run to there. It's halfway. There you go. Now can I leave a gap on the top? Can mark out this entire inefficiency if we wanted to. Boom. Gap. Goes back down into it. Touches it. This case is filling completely. I don't really like that as much. Boom, right there. Order block supporting it right here. Wick to the candle body. Right there. And then here comes the swing high on the current day. Back inside this IRL. Don't forget about this. We cut through candles. Now we can go back to the 1 minute and just see it take the, probably just take that high. But this 15-minute imbalance is going to be the only real thing that's going to create a discount retracement. I don't really care about the swing highs, more as this inefficiency. Is there exit SMT? Nope. Nope. Other ones are dropping down, so just be mindful of that. And what is this on a lower time or on higher time frame? That's a wick, right? If it closes through the wick, what is that? Strong algorithmic signature. Doesn't do it there. See? Wick, candle, here. Boom. Pretty strong. Doesn't close all the way above it, but now should have made it rebalance and just take the high. At this point, you do not want it to touch this order block anymore. It already took out the retracement high. This order block should no longer be reclaimed. Not reclaimed. Immediate rebalance and go. It should go. It should come down, touch this order block here. This is a consecutive order block range. Now it should go. Boom. And there you go. There's your 15-second tape read. Almost like it's scripted. Ha ha ha. All right. That'll do it for me today. As your new high posts 10:30 as we usually see. Isn't it just boring at this point? Right? Like it doesn't get old, but good one to study, good one to come in and look at after the fact, but 15 seconds, the same thing as the 1 minute. It doesn't change, never been, always will be the same. So, well, that's how you read consolidation on a 15-second chart. So whatever it does at this point, like I said, not really as important. Obviously, you do have targets up here, up here, up here. You got 3 targets in terms of time and price, or sorry, just price, but time relative, it could go till whenever. Doesn't really matter at this point. You got plenty of opportunity of a range there from here to there. Right, it's your time adjusted TP, a little bit further of a range than from here to here. But anyone who went from here to here, that's still good of enough of a range, and obviously then you can study how that works. All right, so anyways, probably we'll do a market review later today if I've got time. You can bring any questions. So you will do market review / like Q&A. Backtesting, I'm not a market maker, don't worry. And then yeah, I got answer a bunch of DMs as well. So I'll try and catch up on those from this weekend. And I saw some questions in the PDF chat. So we'll get those read, get those answered, and then carry on with the week. So plans for this week. Tuesday, Wednesday, it'll be obviously with Pablo speaking. The strategy is look for after. I could do a late stream. That's maybe what I'll do for one of those days. Or maybe both. But Thursday, Friday, Lord willing, we'll have more of a real tape reading stream, kind of like this one. And then potentially with some demo trades, but I don't know. We'll have to see. So yeah, that'll do it for me today. This video will be up on YouTube in the unlisted YouTube vids soon. And make sure you journal, make sure you screenshot, make sure you go in and study what you maybe missed or what you didn't miss. And always be looking to improve. All right. So take care the rest of the day, and I'll talk to you guys soon. Peace.